Ira Epstein of Linn and Associates with your metals market update, and this is your wrap-up for Tuesday, the 21st of May, 2019. Well, as you can see, a nice rally in the stock market, but the copper market did not participate. So the stock market today got a bounce in large part due to yesterday the president and his team deciding that maybe they were too restrictive on Huawei and hurting themselves, because we do have some networks in the U.S. They're in remote areas, but Huawei services them, plus some people own these Huawei phones. So what was decided yesterday was they're going to allow U.S. microchip companies and tech providers and so on to continue with the updates of those existing products and networks, but no manufacturer in the U.S. can supply new product, new technology for a new network. Got it? So there's a cutoff point here. This stays into effect until August 19th. The part that had me cracking up today, I was doing my morning video, and I'm watching the news at about 4:35 in the morning. I get up pretty early, and I see this fist, and I see these Chinese commercials coming on. I swear to you, it sounded like when I grew up, Mighty Mouse. I don't know if any of you watched Andy Kaufman and everything in the old days, but that was what it all sounded like. Did I know what they were saying? No, but I spilled coffee all over myself as I was doing it, going, this is nationalism, I guess, at its best. In any case, a basic down day with the exception of platinum, and you'll see what's going on here. So for the weekly chart, we're down about $2.50. Not big, but the bias is still staying down in the gold, as you can see. And so far, none of the inflationary fears have picked up, nor are there any moves on interest rates. When we take a look at the daily bar, you see how the market is falling into these old lows that we had right through here. And these lows are going to be very important. Do they act as a triple bottom? What are they going to do down here? Because you can see that that was a support zone in the past. When we take a look at the market in terms of moving averages, keep in mind that you got a higher high, a lower low. The 18-day average is right here. When you're under it, I say the bias is down. The other key moving average is the 100, which the market went to and failed against, as you can see, about a week ago. What about support? Well, one of the things I teach is that first challenge of a Bollinger Band is where I think professionals take money off the table, be it on the downside or the upside, doesn't matter. You went through this lower band, which is 1269.20 by 20 cents, got to 1269, finished at 1273.20. So I think a certain element of people took money off the table. Is there a trend at hand? I don't think so. The higher high and lower low is certainly not what I define as a trend. And if you look at momentum, the market is oversold with a 25 reading, 25.96. Any reading in the oscillator, slow stochastics, that's under a 30, first gets into oversold. To embed, which means you change it and lock it into a momentum, you have to have both numbers going under 20 for a while. You haven't done that in a very, very long period of time. Most times in gold, you get overbought, oversold, back and forth. When we come to the popular ETF GLD, the trend has been down. Lower highs, lower lows. A much cleaner chart than gold has been. If it can break further, I would look for the support to show up at the lower Bollinger Band. Momentum is still down, and unlike the futures, not oversold. Neither of these numbers are yet under 30. Is there any magic that it has to go to the lower Bollinger Band? No. The number you don't want to see taken out is the high of Monday. That could create a problem and break the pattern of lower highs, lower lows. In GDX, we're fighting a battle where I said yesterday, this market, what it's right now doing is it today reset lower highs, lower lows, but it just can't seem to get away from that 18-day average of closes. The settlement today at 2071 is over that number. As long as it's over it, it means the bias is up, and while the filter of the trend is in place down, it's negated because you're over the 18-day average. At the same time, you've got some divergence because the slow stochastic momentum oscillator is still pointing to the upside. Should this market be able to take out 2085 and not get back under this 2039, I could even argue that you'd have higher lows, higher highs, momentum up, bias up, and put back into play the possibility of the upper Bollinger Band. The gold-silver ratio, well, it's pulling back a little, but certainly no major change in it at this point. And as you can see, silver's been riding this lower Bollinger Band. Now, what that means is the market can't get away from it for the meantime. It's oversold. It's not a trend. You have a higher high and a lower low pattern, but the market's at the lowest low that it's had in a very long time. I mean, while I'm a chartist and I like things to line up perfectly, I'm not blind. I can see that the market is falling away. And what else? It hasn't been able to stay over this 18-day average. It's similar to the coffee chart, which for the first time in a while today actually got a better looking chart pattern. In the copper market, my eye goes one area, this embedded reading. That rules the day. Yes, you can get a rally at any time. Let's not kid ourselves. We were just up to the $3 level. Here we're back to today a low of 270.55. But should the market get anything bearish to it, it could accelerate to the lower Bollinger Band. I'll be watching to see the embedded reading, and until it's lost, I think rallies will be met with selling. In the platinum market, you have the embedded reading. You're riding the lower Bollinger Band. Remember, we had this pattern, lower highs, lower lows, and once the market cleared the 100-day average, it just locked into that lower Bollinger Band, hasn't lifted itself up, while the Palladium has. Palladium's now going sideways. When we were having this monstrous up, I had warned, I said, I think that bubble has burst. I don't think I was wrong when I made that as a chartist. I'm not making a market call. I'm saying that when you pull away like that in this big decline, if you think about it, you haven't gone anywhere in this whole pattern since that time. This is just not an interesting market at this point. In the dollar index, look at what's stopping the rally. 97.93.5 is the upper Bollinger Band. Today's high was 97.97.5, and I will repeat what I say so often. The first challenge of a Bollinger Band is often where money comes off the table. That does not mean it's a trend change. But traders look for spots in markets. The dollar had been faltering after this rally high here back in April, and now it's able to get back up to that number. Is it enough to get the market going through it is the big question. I don't know. But one of the things I do know is what I do in my market research. And what I do in the mornings is, for me, I wake up early, read like a madman. I've also got on all the major networks trying to catch up with what's going on, like I was talking about Mighty Mouse this morning. And bingo, I record 40 charts of futures and cover 5 ETFs. So I'm sitting there on my screen. I am not in this like I am here. The difference is I'm able in that to say buy here, sell there, do this, here's your objective, whatever it's going to be. Then twice a day I write a market commentary. I do a lot of this for myself because it keeps me fresh. I'm on TV all the time and I can talk markets. So I prepare you with it. I'm not out to write a 6-page newsletter. My newsletters are typically can be read in a minute or two, but I'm going to give you an idea. What's coming at the next part of either the trading session, because I write one at 11:30, one at 8 at night. The 8 at night is meant to cover you right into the morning video time. If you'd like to see how I put this all together, I'd like to put it in your hands. Give us a call, go to our website, sign up for a free trial, or you can click here, it'll take you right there. I'm Ira Epstein. You have a good day, and I'll talk to you tomorrow.